Monday on with us. If you're asking yourself, what the hell is Money Monday? Well, you're about to find out today. We got Dawson Ricketts, Diego here. Guys, why don't you
Thanks,
say hello to the people?
thanks for
Hello,
having us,
people.
Cardi.
What's up, Kartik? How you doing, brother?
Doing great here. Really looking forward to getting into this with you guys. These guys are some of the best people I know with the stock market. They know everything in terms of finances, so we should really be able to have a good conversation here. Let's start off here. The people want to know, what is Money Monday?
Oh man,
Money Monday is the solution to the world's problems, or at least America's problems, that the educational system does no favors for, millennials, Gen Z, anybody basically grown up. You get no real treatment to real world financial literacy, investing ideas, and just, you're taught mathematics, you're taught science, you're taught social studies, you're taught writing, but you're not taught how to truly thrive in this, new age economy, which is, it boils down to how you want to attack your life. Everyone's subjective in that respect, and how much money they want and how they want to live their life and what their version of success is. But ultimately, we want to provide kind of a dumb down or explain it to me like I'm five type of a outlet, so where people can really just soak in this information that we're talking about. We're talking about stocks. We're talking about business trends in general. We're talking about what's going on with just general news going on with the economy and stuff like that. So I think really we want to give people an opportunity to understand business school concepts and higher level financial concepts in a simplified format where it's enjoyable to listen to, and where they feel like it's not too big of an elephant to swallow, where they can, engage with us, ask specific questions. Hey, I don't know if I should be putting into a 401k or a Roth 401k. Well, hey, let's dive into that. I think these are things that people should be aware about, and that they really have not had the privilege of learning about in a public school system, unless you go to a university and study it, or you do diligence outside of on the internet by yourself, which that could often lead you towards maybe not the right direction, and down a rabbit hole you don't want to go. So we hope to be personable content creators that also drive value and provide value to the people that are consuming and watching us. Yeah, you have anything to add?
Yeah, Kartik. I mean, in a sense, man, like, most people kind of see finance in a world, like your 401k, your mortgage, even a loan. And a lot of people, maybe while it's not that big of a daunting task, people's stomachs turn a little, and they're like, I don't even know where to begin tackling this monster. So honestly, I think we're just trying to equip people with the most bare minimum knowledge of you telling yourself, whatever situation you are in, like, hey, I can handle this,
It really sounds like you guys are going after the Robinhooders out there. I mean, Jim Cramer talks about the Robinhooders every single morning because you see the pre-market. I remember a month ago, see Hertz up 11%. You're like, what the heck is this about? Hertz is a bankrupt company. You'll see all these different stocks for no reason up 5, 6, 7%. And so I feel like you guys are really trying to educate those individuals because, I mean, as we've seen in the news, there can be some severe consequences if you're not really understanding what you're doing. I mean, this one gentleman killed himself because he was using margin and didn't even know about it on Robinhood. So it seems like you guys are really trying to help that group of people out.
And we think that this is kind of a point where it's great that investing has become more accessible to everyone. And it's almost like it happened in a blink of an eye, where investing used to be more of a professional thing, or if you had a lot of money, something you did. Nowadays, with free trading, it's something that you can do on your phone at any business hour of the day, and with as little money as $10. So right now, it almost opened the door to a new amount of people that could invest. The problem with that is that there's definitely a knowledge barrier. The market is a scary thing. The market is this big behemoth. People don't understand it. So really, if you take these people and you throw them into the investment pool and they don't understand it, they're going to get chewed up and spit out. Institutions, love doing that with the common investor or novice investors. However, we want to give people a chance, and we believe, I think all three of us are in agreement that ownership of these companies that drive our society economically, to have individual ownership in these vehicles is a beneficial thing for everyone that's partaking in the society. This is almost like a if it were to continue to evolve where everyone had ownership in the companies, it almost becomes socialism with choice, as opposed to government putting their hands about where you're putting your money and how you're making returns. But it's almost like, hey, you decide how you want to get the returns from, you're putting money in these companies. There's got to be some sort of this whole cycle continues. So we're trying to there's definitely a knowledge block, and you're right, man. I mean, Robinhood made it so dang easy for these people to trade stocks and trade options without even educating the investors. That was the frustrating part about watching it. Is now the technology is there, the ability to do it is there. We just need to catch up humans. It's a lot like this people being scared that technology is going to take all these jobs. Well, can we educate people that are doing remedial jobs to do higher level jobs, so that the whole machine can keep growing with each other, as opposed to there being a little bit of a disconnect?
Yeah, that's crazy. I mean, to think about what's going on with a lot of these tech companies right now. I mean, you look at these companies like these price to earnings ratios, which are supposed to be like the standard metric for how you invest. You're seeing these companies like, and I love Tesla. Tesla's my favorite stock in the world. I think they're changing the world a lot. You look at their PE ratio, it's like 1100 or something ridiculous. You look at Zoom video, it's like 528 after their massive move. But people keep piling in because they see, wow, this thing keeps going up. It's going to go to 1,000 Zoom video, even when that really doesn't make any sense rationally.
You just saw the IPO of Snowflake too. I think at one point it is 200 times next year's earnings, or next year's revenues. So I mean, that is a multiple not really seen since like the .com bust and stuff like that. Some of these technology companies, there's merit to the increase in multiples. With the pandemic and everything, has put them in position to really thrive more so than anyone thought would happen. It's made them kind of rise to the top even quicker. The push to digitalization. So some of these are have merit, but others are just riding this ridiculous wave of ridiculous multiples in the market. Yeah,
Kartik, in a sense, man, it's like, in a sense, to kind of what we're trying to do at Money Monday and tying in with this, it's like almost at this point, like you said, the market's hot and people, like you said, the Robinhooders, like in a sense, they're not investing. I almost kind of see it as they're gambling. And it almost, in a sense, we're trying to educate people in a sense, like, yeah, you can make money, you can also lose money, but it's like, know what you're getting into. Don't just be throwing money at something. I kind of see it right now, like the market, I feel, in a sense, it's like if it were a roulette table, like it just keeps coming up red, and everyone on the side.
Gotta come black one of these days.
Exactly. But like the thing is, like, most people are like, oh, it's red, like, and it's been red the last like 100 spins. So I mean, I can't blame people for hopping in and betting on red and winning. But however, when that black does hit, in a sense, that's gonna be a lot of chaos. And it's kind of, in a sense, already has, like multiple companies and like WeWork and just people just start losing money, and that at that point people are take it as gambling. It's not gambling if you kind of do your due diligence and know really what's going on behind the scenes.
Yeah.
So would you guys, and a really popular take right now is, tech stocks are changing the world, all these tech companies. Would you guys then almost say that you would almost do the reverse, invest in industrials, invest in cyclicals that haven't really taken off yet because they haven't gotten the Robinhooders necessarily? So you don't want to be part of that Robinhood trap.
Potentially, but I do not think you want to miss out on the potential of the tech stocks as well. With the revolution going on, you're seeing 5x, 10x on your returns. You don't want to shun your back to that. Obviously, there's potential that these things come back and come down, which we do see happening with a lot of uncertainty going on. But like Diego said, man, people, it's almost like gambling nowadays, where people just think that whatever they buy, it'll keep going up. Stocks don't go down, when in reality people need to realize that this whole thing, stocks go up, stocks go down. They fluctuate. Sometimes they find that equilibrium, but most of the time they're either overvalued or undervalued. And it's really about having the knowledge to see that. So
like they contract, they expand, they go up, they go down, and people just kind of need to get a grasp of why that's happening.
One thing I think novice investors should know, and I love this quote, but it's as prices go up, risk goes up. People think just because stock prices are going up, it's less risky. What the hell is that? People are just, that's the psychology behind investing. Everyone's like, oh my God, Amazon's 3,000. Oh my God, Amazon's 3,100. You got to put more money in. Realistically, we should have been putting more money in when Amazon was at 2,000. Now you should be thinking about, whoa.
However, he's right. But Karlik, in a sense, I feel like you said, tech companies, like people see these things like as whales, and everyone's hunting these whales. And people don't realize that in the vast ocean, if you do it right, you could be fish. You could ignore those whales completely and go for the home improvement stores, go for the most boring stocks in the world.
The things
and you will be doing better than the whale hunters,
I really think, though, that plays a big psychology into the Robinhood community. Is like, who really wants to buy like Smucker stock? Like they make peanut butter and jelly sandwiches and toast. Who wants to buy that? The sexy name is Amazon. Oh wow, they're shipping products all over the world. Tesla. Oh man, these cars. You look at people driving them down the street. I want to be the cool kid down the street. I want to be one of those types of people. So you look at those, and I mean, who in the hell wants to buy like sandwiches? So I think that's something else that's really important.
Hey, we're seeing Nikola just climb over Ford and General Motors, and people are so excited about it. When in reality, man, are we getting ahead of ourselves or what?
Let's touch on Nikola. I think that's an important one to touch on.
That's something we've actually talked about on Money Monday. We gave an update last week on it, but SEC is actually now investigating Nikola. Nikola approached the SEC saying, we want to work, cohesively with you guys or cooperatively. But and then now Nikola's also suing the firm that released that research article. So it's just gonna be back and forth. But honestly, if there's merit to a lot of those things that were in the article, that spells some bad news for Nikola.
I think definitely, especially to our listeners out there, if you have not seen, there's a documentary on Hulu. I'm not sure if it's on anywhere else. I'm sure it's on Amazon. I mean, Amazon's got everything. I know it's not on Netflix, so I've looked. There's a documentary on Elizabeth Holmes and Theranos.
Yep.
And how she promised the world.
Did it all.
She promised the world, got into Walgreens, was basically saying, hey, my blood test will give you all the cure to all your diseases. It'll tell you anything you might have. When in fact, I could have done the same test because it didn't do anything. It was literally going and drawing your blood as if you were in a hospital or something. And so Trevor Milton, CEO of Nikola, has promised a lot. He's promised trucks can roll by themselves when they're actually going down a hill. And that's the only reason they're moving down. He's promised they're going to build cars. Last time I checked, they don't even have a factory that's functioning at the moment. I think it's next year they have an actual factory.
They have something over in Europe where he said that they got 5 cars coming off at the end of this month. And then the guy reached out to the manufacturer's representative, and they're like, boy, we don't have any cars in production. So, I mean, that's what we're talking about. And the Elizabeth Warren, the Bad Blood book, that's a great analysis or comparison right now, because it could be true, man. They have this crazy secret technology that they want to keep under wraps, but they hope to unveil to make lives great. And, who knows?
What if it's so secret? But that's my issue with them. Like, first off, their only revenue was Trevor Milton buying solar panels for his own home. That's their only revenue in the last quarter. But if it's so secret, like if it's something so revolutionary, I would be, as a business owner, really excited if I had built something so revolutionary that, I would at least make sure people knew there was something there. Like, I wouldn't try to keep it under complete wraps. You look at Elon, and for how much crap Elon Musk has taken over the years, the dude is never shy about saying, oh, look what we've got coming. He tweeted out about Battery Day. Big announcements on Battery Day on the 22nd. Trevor Milton seems a little suspicious to me. I don't know. Maybe I'm way off base here, but just never been a big believer in Nikola. Never.
I think this was a very well-timed. It wasn't an IPO. They went public on a reverse merger, the special purpose acquisition company, the blank check companies that are so popular right now, but seem to definitely be riding the coattails of the Tesla electric vehicle run-up.
And, as much as it hurts to say, because it is an Arizona, Phoenix-based company, it shows you how dangerous, in a sense, momentum can be. Like the electronic vehicles, space. Right now, people, like big companies, if you fake it till you make it, and if you do it well enough, they will throw billions at you. And that's kind of, in a sense, just people need to conduct their due diligence. You'd think somebody at GM, one of the biggest companies in the world, would conduct their due diligence when making a partnership with Nikola. And now I guarantee you that lady or man, whoever it was that kind of set that up, is really
on the hot seat.
Yeah, man, it's a lot.
Yeah,
it's a lot. Let's dive in here before we leave for the day. Let's dive into, there's a documentary on Netflix, The Social Dilemma, and I know we all love tech stocks. And tech stocks, and especially tech companies, it's really easy to sign up for. Facebook, all it asks me is for my personal information. Same with Instagram. I mean, it doesn't really ask me for much. It's not asking me for a credit card. Beautiful. I don't really want to spend any money when I go into those places anyways.
Yeah.
Are they really free?
No.
Are they free, guys?
Guess what? You're spending your attention and your time.
And not only that, but like your information. That's the big, if you have someone's age, what their interests are, and their email, and even in a sense almost a phone number, that itself is worth its weight in like literally digital gold, and it's nothing's free, which makes sense. But then again, like no one's holding a gun up to your head and saying, sign up for Facebook, sign up for Instagram. You're very much doing it yourself. However, with that free platform, in a sense, it's not free. You're basically feeding them everything that they're looking at.
Yeah, the analogy I like to look at it as, if you had a field full of zombies and you had something that could capture their attention, the data and the constant learning about the zombies, to use that more efficiently would be like building a wall around the zombies, all right? And then these zombies don't know really what they're doing. They like it. They're getting treated nicely. Maybe they're getting massages like the beef, what is it from Japan? The Wagyu beef or whatever.
Yeah.
But as they're building these fences around the zombies are just getting trapped in this thing that they don't even know they're getting trapped in. And boom, out of the sky comes an advertising company to give them a 10-second clip of something. And the advertisement company is going to go pay the farmer to build further walls and walls and walls. So it's like you're just watching a bunch of zombies get trapped into something that they don't even know they're getting trapped into. They're not technically losing or paying any money or anything like that. They're just getting suckered into this stuff. So I think The Social Dilemma was great to really kind of extract that and put it right in front of you. Hey, this is what's going on.
Facebook is the biggest, in a sense, employer of freelance photographers in the world. Literally, like a picture's worth 1,000 words. If you looked at my Facebook, you would see all my interest in high school. You would see all my friends, what we did on the weekends, and that alone right there can, in a sense, if it's in the right or the wrong hands, you can make a lot of decisions on how to advertise those people, how to reach out to those people, how to basically figure out their likes, their dislikes. And from that information, that's just cash right there.
When Diego sees a post that his ex-girlfriend just got back in another relationship, following post is an advertisement of ice cream from McDonald's, it hits him in the heart. He wants to go get an ice cream from McDonald's and feel better about himself. So that's how they're getting it, right?
Yeah.
Oh man, Diego, sounds like we got some interesting stories for the next time we're on here.
He's got a lot of exes, so it happens frequently.
It does make me wonder we have an election coming up here in about a month and a half. These stocks like Facebook, these companies, they really are charging you a hell of a lot to use them, even though it's not a dollar amount. You gotta wonder, are they gonna start being regulated? Or is there, in essence, they're cheap. They're a cheap stock compared to all the other tech stocks. But are they really cheap? Are they really that cheap? Because if regulation comes in on them, you could see it almost being like a house of cards where they need to break it up they need to stop collecting certain information and targeting ads. I mean, in essence, that could be the worst case scenario for tech stocks if that happens.
Yeah. In the social dilemma, they talk about that exact thing of regulation. Back in the day when you had your kids watching, ABC Family or something like that, there was regulations about what commercials they're getting fed on that ABC Family channel. Now when they're on Facebook or they're on YouTube and they're getting deep into videos and deep into scrolling, there's less regulation and less oversight on what they're getting fed and what they're consuming, and it's really dangerous to specifically the younger population and realistically probably the older population as well, getting taken advantage of with misinformation and not even realizing it.
Kartik, in a sense, man, we all kind of grew up, like we weren't really, I guess, we didn't really know what the tech bubble was in the early 2000s, and whatnot. However, we did, in a sense, grow up with, first of all, the internet really not even being a part of your lives. I remember the day that we got internet at my house, and like it was horrible, like dial up. I couldn't use the internet if my dad was expecting a call because you'd hear that, the wah, 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 wah in your ear. But I remember yeah, exactly. But like we got the internet, and in a sense, it was like it's literally like the Wild West. It was all free roam. Like no one had any rules on it. There wasn't any regulation. And to be honest, up until recently, I'd always kind of been a firm believer of no, like don't break up, big like tech companies. Like they need to kind of naturally just kind of come about. However, but that's also in a sense, they are kind of getting too big. In a sense, maybe the Wild West does need to basically get closed in on. It needs basically like
regulation or oversight.
In a sense, there was when the pioneers were coming and exploring America, it was free roam. If you got there first and you got that piece of land, you could, as far as you wanted, that was your land. And there was a gentleman that created barbed wire, and as soon as he created barbed wire, it was basically like the Wild West. Just boom, it shut down. Like in a sense that it wasn't free roam anymore. You can't just go anywhere and claim it as yours. So in a sense, I think the invention of this so-called social media barbed wire is starting to take place. And I think I was a little naive at first saying, no, it doesn't need to be, but maybe taking a step back and seeing how big these companies really are. Maybe they do need a little more regulation, but time will tell.
Once Diego started seeing all of his ex-girlfriends show up on his feed, that's when he realized that this was not a good timing anymore.
Regulation.
Stop, Facebook, stop. Hey, Kartik, you brought up the election, though, man. I want to go back to that because that is a contentious topic right now. And, the social dilemma, the Netflix special just said that misinformation is spread, or they used fake news is spread 6 times faster than real news. And that just goes to show you how powerful the internet and kind of group mentality and previous biases that you have in your brain. These are all powerful things where our brain is, millions of years old and hasn't really progressed that much, in the past couple hundred years. But technology has progressed immensely, like stupidly exponentially, computing power. And, at some point you're going to have a point where technology is just too powerful for our brains. And it's not even about, our brain's best. It's not saying that technology is better than our brain's best. It's saying that technology is better than our brain's worst. And so technology can sneak into our brain by beating our worst and slowly get better and better and better than our worst. And that's a scary thought.
Yeah. It's very scary.
It's not good. It's not good what's going on, but hey, something we don't have to worry about because we're not in the government. So we're not the ones making the decisions here. But cool, guys, before we go here, the tradition we always love to do on the show, winners and losers. Let's look forward to
something.
Let's get it.
That's why I woke up this morning.
Diego, let's start off with you, buddy. What stock are you looking forward to as a potential winner for next week?
Yeah. I got it right here, and the only reason I'm pulling up because I want to be sure I'm getting you the right information. It's Pfizer, and their symbol is PFE. And the main reason that I'm kind of, big on them is the company's been betting, in a sense, on a vaccine for COVID. And they're really putting a lot of their, eggs in that basket. With that being said, though, even if basically, I think Pfizer's such a big company that they're going to be in part of it regardless of if it's their company or not. I forgot what company it was, but they came out and they said the vaccine trials, most of the time, vaccine stuff is, very under wrap and like in-house. However, this is a different situation, and companies have been like, yo, we'll be open about it. We'll kind of tell you what we're going through and stuff like that. So there's more transparency. So I think they're going to be a part of it, even if it is or it isn't in their house. And on top of that, they have a huge international reach, and they do so much work with like cancer research, blood clot research. Just in a sense, I think Pfizer, and not in a sense this week coming up, but I see Pfizer very well. And I think right now they're trading under, I don't know the exact number. I think it's around 35 or 36 bucks. So it's under $40. It's not that, and quote unquote, expensive of a stock. But it's these big companies that most people, you don't think of a vaccine company being sexy right now. But
hey, Robinhooders, you heard Diego. Go ahead and jump on in. It's right in your wheelhouse, under $40 a share. Let's go buy that thing up. You'll wake up, it's at $60 a share with no reason whatsoever. All right, Dawson. Well, what do you think here? What's a potential winner in your book?
I don't necessarily think that this winner is going to be winning next week, but I think right now you got a good entry point for the long term. And my winner right now for the long term, as of this week, is Lyft, Lyft. Lyft IPO'd around, I think it was $72 back a couple of years ago, and they started this year around $50. And since that, right now they trade at $30. So it's really just been a hammered stock, beaten down. They just went under the 10 billion market cap figure. So I think right now that this is a company that, as we start to end these lockdown restrictions, you heard, I think it was Jamie Dimon saying, let's get guys back into work. You're going to start seeing, the economy kind of come back to normalcy. I think, coronavirus for the most part is under wraps. We're not worried about this massive pandemic anymore like we were initially. There still could be, a second wave, and I totally see that as a possibility. But I do think Lyft is positioned long term to be the number one ride-sharing company. And I put that on Uber right now, but Lyft is just focused on it. Uber's got so many different things happening that Lyft, their singular goal is to make your ride experience the best. And ride-sharing, I think, is going to just become more and more popular going forward. So, yeah, I like Lyft right now, just from a value standpoint. Around $30, I think there's no reason why it can't get to pre-pandemic levels of 50, 60, 70, 100. A market cap of $10 billion is really not that high for a company that can be global and really a technology company that relies on contracted workers. Now, they have had legal problems in California. California's trying to pass a bill to make their drivers classified as full-time workers or workers with benefits as opposed to contractors.
That's a big deal.
From what I understand, it's getting a lot of pushback. There's a good thought to make to try to protect your workers. But at the same time, the workers are like, dude, we love it. We have these opportunities to work when we want, how long we want. The pay really isn't that bad. Reports come out and they say Lyft and Uber drivers are actually getting paid decent wages, and when all factors are taken into account. So I just like the long-term prospects of Lyft. They're not trying to do too much. I think Uber will be a monster company in the future, but right now they just don't seem to have a singular idea figured out. It's more of just like, hey, we're going to be this massive tech platform. But right now, Lyft is singularly focused on the ride sharing, and I think that'll start to come back in the next year, back to normalcy, and we should see Lyft back to pre-pandemic highs.
Yeah, just to draw on that a little bit, Dawson, going back to that Robinhood debate, a lot of Robinhooders love the sexy names, and I think that's why you have more volume potentially in Uber. More people know about Uber. More people think, oh, Uber's sexy.
With Robinhooders, man, we're moving from technical analysis to just like psychological analysis. What do people like? What are they going to put their money into? And, there's good things about that, like sustainable companies or ethical companies, ESG companies that you would see, hey, here's why I want to put my money into this green company. But like right now, people are putting money into companies that they just like or think they're sexy as opposed to are doing good for the world or, they're a good value.
It's in a sense, I think it's kind of that like Momentum. I think psychology, in a sense, it's very real, but I feel like that can kind of disappear very quickly. It has no meat. It can go as quickly as it comes.
Yeah.
With momentum.
And it goes quick when the sell-offs happen. All of a sudden, the market all at once wants to sell off, which is a massive problem. So, Cardiff, we got our winners this week. Pfizer, Lyft. What do you got?
So mine is not going to be for this week. It's going to go off of the theme you guys are doing. It's going to be throughout the end of the year. We're changing this up a little bit here. I love Lululemon right now.
Oh,
it's
good call.
Trading about under 315, around 315. Why I love Lululemon, their company, it's not that expensive of a stock. Their price to earnings is in the 70s or 80s, so it's not that bad for a growth stock. Why I love them.
That would be bad for a normal apparel company, but this is not a normal apparel company. This is a growing apparel company.
It's growing. It's growing, but why I love them. September's a bad month for stocks. Everyone knows that. It's historically the worst month on the calendar for stocks. But October through December, you start having people think, oh, what's coming up? Holiday shopping season. You've got Black Friday coming up in November, Christmas and the holiday season in December. A lot of women love their Lululemon pants.
Oh, yeah.
A lot of guys wear Lululemon shorts clothing. Yeah. And so I'm looking at what kind of stock is off of their highs. Lululemon's high was around $400, so they're well off their high.
Yeah.
What stock has that potential here to really not just get back to their highs, but see revenue accelerate in the year end? I think Lululemon's a stock that marches back to their highs by year end, maybe even above their highs at year end, just because everyone's going to start buying pants, especially women. And so I want to be on that trade. I don't want to be betting against them. So I'm looking to that.
There are so many companies trying to become an alternative to Lululemon, and I see on Instagram girls, pushing, this company or that company for leggings. But at the end of the day, I think girls realize Lululemon is just top of the line stuff, and they will pay for it.
And not only that, but they will.
It's almost like Apple AirPods. People want AirPods. I mean,
there's the generic AirPods that you see, I've seen some at the gas station. You can buy them for $30, but
you want the Apple AirPods for $200. Why? You want the Lululemon pants as well. I mean, it's just natural.
In a sense, I think Kartik, I think you're right, man. With they're good quality in the sense they're not the cheapest. However, I think a lot of people that had planned spending money on going on vacations or just general spending, this 2020 is gonna have the biggest asterisk, I think, literally since 2001, 2000. However, those people that aren't even regular people that, maybe instead of not going to Bora Bora, maybe they go to the Grand Canyon, that money is still in their bank accounts. And maybe they're going to be like, hey, you know what? I didn't really spend so much this year on the regular stuff. Why not buy myself a nice pair of Lululemon pants or shirts? Because they are great, man.
And the markup is unreal. You go into a Nike store and an Adidas store, and you see they're like, oh, $20 for a pair of shorts. I went into a Lululemon store, and I'll admit, I have a couple pairs of Lululemon shorts. I got talked into buying them. I walk out of the store, I'm like, holy crap, I just spent $68 on each pair of shorts. I could buy 3 pairs of shorts for the same price as one pair of shorts. But people do it. And so I don't want to fight the trend. I really don't. I think they're growing. Well, let's go off to, before we leave here, we got to need our losers. Diego, what stock do you despise this week?
Despise is a strong word, but let's use it. I despise GoPro, man. And the letters are GPRO. And there's really only 3 reasons why I don't like it. Less activity, those big, the race car drivers, the surfers, the people that are doing, jumping out of airplanes, they usually use GoPros. In a sense, that's kind of stopped in the world right now. I don't know if you guys have seen, but so that's one reason. Drones right now, obviously, drone racing, drone videos, all that, it's coming up. But I already feel literally having a GoPro in your hand or even on a stick, that already seems ancient to me. When you can literally have a flying drone, not only getting way better quality of videos, but it can go way farther than it being limited to a stick in your hand. So I think drone technology is going to basically push GoPro out. And then the last reason, man, which I hope, if anything, I hope I'm wrong on this one. And if anything, I hope this is not a reason, but the U.S.-China relations, man, they were so sour at like 2018, 2019. They kind of got a little better with like, stopping the like embargoes on, like tariffs and stuff like that. And now, man, they're just this, new COVID, like just soured it, man. So TikTok's kind of a big thing. People are kind of in a sense scared of how much the Chinese government's in the Chinese technology companies, and a lot of microchips come out of China, and just the advancement of the actual stuff inside the camera. It's just trickier, man. So not a big fan of GoPro right now.
And Diego, going off of that point, you could even see that TikTok deal. It's big, not for TikTok. I'm not the biggest fan of TikTok. I don't really see TikTok in the same vein as I see a Facebook or an Instagram.
Sure.
But you had the U.S. government intervene in a Chinese type of technology company. What if it's the flip side? U.S. companies in China that have a supply chain there. What if China says, hey, let's do something about this? It can get messy. It can get real messy for everyone.
And you know what, man? At this point, as sad as it is to say, I don't know if it's really like, they want to protect the proprietorship of each country's, business, or if at this point it's a little bit of an ego. Both. So whenever there's this much, like we're a globalized in a sense world, man. Now, like, you know what people are doing in India, you know what they're doing in Bora Bora. So we're not going back from that. And if we have countries just dealing blows left and right, like someone's gonna feel that blow. It's not just set in the air and that's it. It has effect.
Cool. Stay away. GoPro. No go. Dawson.
Kind of going off Diego's trends of things getting left in the past. My stock to stay away from right now would be these, traditional car companies like General Motors, for instance. So that's who's going to be my loser this week. But I just think with all the bullshit going on with Nikola Motors, General Motors is just kind of in over their head. They're trying to kind of meet that next wave, but they might not be going about it the best. For some reason, I just have a better opinion of Ford, and I can't put my finger on it. They got the electric vehicle Mustang coming out. They seem like they're making a better kind of push towards that realm. But GM just
more genuine.
Yeah, and GM just seems like they're trying to partner their way into it. I saw that they made an investment with Rivian, which I love Rivian, man. They have the backing of Amazon. 100,000 vans or trucks are pre-ordered from Amazon right now with Rivian. So I like the future of car companies, but I like future car companies. I don't like, these old car companies. At a certain point, it becomes cheap enough to want to get into. But right now, with all the BS going on and the drama and the dilemma that the potential partnership with Nikola, unless it's all roses and fine and dandy, then it'll be a great stock to be in. But right now, I just think that poses way too much of a question mark and fogginess going forward for the next, foreseeable future.
Yeah, and if you guys don't mind me adding and agreeing with Dawson completely, these big companies, in a sense, they've been around since literally like World War II, Volkswagen, GM, Ford, all these companies. In a sense, they've lost the confidence and the trust of the regular people, like Volkswagen, like emissions gate. They were tampering their equipment to just pass emissions. And then their luxury dealer, Porsche, people don't realize there's mainly 4 or 5 big auto companies, and all those underneath, the Porsches, the luxuries, the BMWs, all that are under these big umbrellas. And if the umbrella has a big hole, imagine the little umbrellas underneath it. So yeah, to Dawson's point, that's pretty good, pretty good to bring to light.
One saving grace might be low interest rates for the next couple of years, really, helping out the financials. However, that's not a long-term thing.
That's not a real shining endorsement right there. All you can go off is low interest rates. No go. You hear the people. People, stay away. Yeah, all the legacy automakers, stay away. We don't like them.
Who's your loser this week?
My loser has actually been a winner. Wasn't a winner from me, but it's been a winner over the last couple months. Actually, few months. So one of my coworkers and colleagues used to tell me, workhorse, buy the horse. They were at like $2 a share. Buy them. And I was like, hell no, I'm not buying the workhorse. I don't know anything about the workhorse. I'm not buying a $2 stock. Workhorse is over $31 now.
Ooh.
Wow.
I look like an idiot. But I'm gonna continue to look like an idiot because I'm gonna say I don't really short stocks, but man, that is ripe for a short. That stock has gone up in a straight line. I understand they got a trucking fleet that the post office is potentially gonna buy. I understand that, but the post office might not be there in 2 years. You never know. So I am not a fan of the horse. I think that thing is going to crash and burn one of these days. It's got all the Robinhooders in. Literally, if you want a textbook definition of a Robinhood stock, it is workhorse. It is workhorse. They have skyrocketed for no reason. I was a part of that skyrocket, but I was not. So,
Yeah. Hey, tell your buddy next time he's got a pick, he's got to come on, all right?
Oh, I'll let him know. I'll let him know, and I'll let Crypto Dan know. Come on, he loves the horse also. But before we leave, give a shout out to Money Monday. Tell the people out there where they can follow you guys, where they can find you, where they can ask you any question they might have. Diego,
Yeah.
might have women come on there to ask.
I got a great girlfriend right now, and so if she sees this, Daytona, you're a great girlfriend. Right now, guys, we are on Instagram, and the handle is Money Monday. However, with the O's as zeros, we didn't beat them to the punch with getting the regular Money Monday, so we had to, adapt. However, it is Money Monday, and literally just if you ever want to get just the basic, the most bare minimum layman terms financial, in a sense, just knowledge, that's a good spot to go, guys. It's nice, we're been building it for about 2 months now, so gonna keep going, just gonna keep the snowball, rolling, and check us out.
Yeah, and Diego wanted to shout out his girlfriend. I also have a nice dad. I'd like to give a shout out to. So, dude turned 55 yesterday.
Yeah.
So happy birthday to Mark Ricketts. Yeah, come check us out. M0NDAY. M0NEY.
Yeah.
And we'll make your Money Monday dreams come true. We also do like Saturday morning stocks by the pool. So today's stock actually was Lowe's, and we dive in a little bit about kind of what's going to impact or drive that stock going forward for the next foreseeable future. So come check us out on Money Monday. But Kartik, thank you for having us on, man. This was awesome.
Yeah, man, this was unreal.
As always, enjoyed talking about what's going on, and hopefully we can help as many people out as possible to just kind of grasp kind of what's going on in the economy, what's going on with each specific company. How can I analyze this, and how can I use this to my advantage? If we think larger than ourselves, we're going to go a long way.
Totally. I'm going to put the link to the Instagram in the description here so everyone can just copy and paste that into Instagram. I think that's a good idea, but also everyone can check them out. They're seriously doing some great stuff. So looking forward to it, guys. Looking forward to having you guys on again. And let's hope our winners are actually winners and our losers are actually losers. Bet against the horse. Bet against the horse.
Bet against the horse. Bet against GoPro and GM, man.
Sounds like a plan. All right, guys. We will see you guys hopefully here pretty soon.
All right, Carter.
Thanks a lot,
Take
man.
care.
Appreciate it.